Sandip Sabharwal is here. He's working out of home, so I don't think he has much of a trouble with the rain or not. But Sandeep, what about TCS? Doesn't seem like their trouble of order wins seem to be clearing. I mean, the management themselves saying that certain projects did not close in the first quarter. There's nothing much to read in the order book. Operationally, though, the numbers are in line to a slight beat or so.
Operational numbers were beat on all parameters, although moderately, like not significantly, because both in terms of growth as well as margins, they were better, although the US growth was still subdued. Now, the management has been very bullish over the last few quarters, and this time they have sounded a note of caution, which is slightly intriguing because when the indications were very clearly there that there's likely to be a continued slowdown. They were sounding bullish, and when I think things could be bottoming out, they are sounding cautious. But that be, I think the results don't do much uh, for the stock. I think it creates a moderate upside in the near term, in my view, because the TCV order bookings were strong over the last 2 quarters. This quarter has been a bit lower than expected, but then the past orders could start getting implemented going forward. So I think it opens up a moderate upside. So depending on how the stock reacts, so if it reacts negatively, then I think people with a low risk kind of horizon could aim for a 10-15% kind of return from the stock over the next year.
Right. Sandeep, what did you make of the move coming in on oil exploration and Mr. Hardeep Singh Puri's comments of massive investment needs to go in E&P and all of that? Because not only ONGC, All India shot up, ONGC came above 300 after a very long time, but the smaller ones, the tiny ones, HOACs of the world, this, that. Is there a play there?
The news flow play is there, but actually there is not much of oil and gas in India. So you can keep on exploring whatever amount you want, but I think you are unlikely to find much. That's my view. So I think all these moves, which are backed by statements. So I think there are companies who would be doing the exploration part, providing equipment, etc. So they could get a fillip. Obviously, all these companies try and find more oil and gas, but I think given India's structure, the sediment structure, everything, there is not much oil and gas in India.
What about the power financiers? Yesterday, the entire REC, PFC, IREDA, of course, the results are also lined up for today, was pretty active. What's your take on power financier valuations in particular?
Now, Ajay, if you see the valuations of most of these companies, they have come to some slight discount to the private sector lenders, but the valuation, so they are still at a slight discount, but then as PSUs, they cannot be trading at private sector bank valuations. So I think they are approaching that. And to that extent, the risk reward, I would say, is unfavorable. The momentum is very strong, but then if the momentum breaks, then given the huge retail participation as well as speculative activity in these stocks, the sell-offs also could be drastic. So people should be careful buying into these stocks at these prices.
A word of caution for some of the power plays.
That there could be some SOPs for the MSME lending space this budget. It appears that the government and the RBI wants to direct credit flows back to MSMEs and wider range of MSMEs. They are planning to kind of make the list broader. What is your take on small finance banks or some other companies like Ugrow or Five Star who cater to this MSME credit demand?
Yeah, I think there are a lot of budget expectations. It's very tough to predict because no one tends to know actually in advance what's going to happen. And most of the times, most of the announcements of the budget tend to take people by surprise. So I wouldn't like to comment on what could come in the budget. But I think from the perspective of lenders to small and mid cap companies, there is obviously an opportunity because as the larger banks become larger, very large, so it makes less sense for them to focus on small ticket lending, and that creates an opportunity for these banks. However, when people value these companies, they should also realize that this kind of lending carries higher risk. So in a benign credit cycle, things look very good. But on the inverse side, things could also turn very bad. So the valuations which we give these companies have to be factored in accordingly.
Sandeep, how is it that you're, reading into this entire auto discount story? I mean, yesterday too, after day before's near about 7% fall, M&M was down 1.25%. Now, sure enough, it's been one of the best performing auto names. But if the decline were to accelerate in some of these names, would that be a good buying entry, or would you say the best is now behind us when it comes to Motown?
In fact, if the declines accelerate and the stocks are available much cheaper, I think autos represent a good buying opportunity on corrections because of the fact that the upcoming festival demand, if the monsoons are also normal and the wage cycle also is peaking out. So if we combine all these factors, the upcoming festival season could be positive. I think what the auto companies are trying to do because they are making so much profit, they are trying to clear out the inventories prior to the start of Shraddh and before the holiday season actually, the festival season actually starts. So I think it's a good move. It could boost volumes in the near term, which is traditionally a leaner period for auto sales. And input cost pressures are still benign for the companies. Recently, steel prices have further been cut. So I think from the perspective of input prices, they are in a reasonably good position. And I think that's the opportunity they're using to try to boost volumes. So I think if this negativity continues for a few more weeks, then we could get these stocks cheaper and buy into them.
I have this sentimental bent towards TCS. It's been a 20-year association with them. You've always looked at TCS not based on sentiment, but you've always looked at TCS based on numbers. I have come back with the following, that there seems to be a quarter on quarter improvement. What was 0% growth became 1% growth, then it became a 2% growth, now it's become a 2.5% growth. So are we getting a sense that the contraction in IT is over and the expansion phase has started?
Yeah, I think so. I think expansion phase has started. Now the key is the pace of the expansion because can these companies go back to double-digit growth or not, given their size and the structure? Or will they be a 5 to 10% kind of growth company? I think that's the debate. So if you are in that double-digit growth camp, then I think they offer very strong buying opportunities. But if you believe that growth will be constrained below 10%, then they'll give moderate returns from here. I don't think there's much downside, but the returns could be moderate, more near 10, 12% on a yearly basis. So I think that's the key. It's very tough to say whether they can go back to double digit again or not.
So double digit growth, Sandeep, let's assume is not coming. Let's assume that double digit growth, and it's a very high probability that FY25 no double digit growth, FY26 also no double digit growth. But if one assumes that a 5-6% growth is there, let's say for the industry, maybe a percent higher for TCS because it's got advantages of pricing, where could the stock move with this underlying framework that the growth is going to be better than last year, but it will still be in single digit?
In that case, I think these will be 8 to 12% kind of return stocks because they cannot be further re-rating because the stock already trades at a 30 PE. So the further re-rating will not be possible in that scenario. So there could be some positive sentiments come through as the rate cycle reverses, as the US elections get over. So I think 8 to 12% then could be a reasonable expectation.
Really appreciate your time. We've extended your appointment by 2 more minutes, Sandeep, today. We are very grateful. 9:02 हो गए.
See you Monday.
All right. Take care.
If you like this video, then like, share and subscribe to ET Now.